Last week, we saw mortgage rates stay mostly steady despite some of the big headlines that were coming from the push of Washington to cut interest rates. But this week, everything's about to shift. And this week's mortgage market update is all about jobs data and what happens with these reports that could directly impact our interest rates. So if you're a home buyer or a real estate agent, this week definitely matters. Right now, we're in jobs week. Every day brings new reports on the health of our labor market. On Friday, the big one drops. The BLS employment report markets are expecting 125,000 new jobs, and unemployment is to stay steady at 4.2%. But the big drop is from last month's numbers at 177,000 new jobs. So why does this actually matter? Well, because the Fed is actually watching. If the job growth slows down, unemployment ticks up, it could give a reason for the Fed to actually cut rates this summer. And that's what the markets are actually hoping for. Now, at the same time, bonds are bouncing around a lot. Mortgage bonds are trying to hold above key levels, but rates could move quickly depending on what these job reports come out this week. So what does this mean for you as the buyer or the homeowner that's thinking about buying a home anytime soon? If last week's inflation report made rates feel a little bit calm, this week's jobs numbers could either push them down or back up. It's a good time to talk a strategy, especially if you're hoping for the lower payments or thinking about locking in something relatively soon. And for my real estate agents, this is the moment to educate your buyers who are waiting for those rates to drop. Share this update with them and encourage them for this urgency, because if the job data is actually disappoint, we could see a better affordability a lot sooner than we anticipated. If you're ready to explore your options, go to callmortgageliz.com to schedule your call. I'll help you plan based on what the market is actually doing to prepare you for your next home loan.